Okay, so let's get started. So thank you, Jill Beresford of MBDC, which stands for the Massachusetts Small Business Development Center, right?
Yeah.
Yeah. So Jill has been at the MBDC since 2014, right? And before that, she's done an incredible amount of work with restructuring and turning around various companies. She's been in filled positions of CEO, CFO, CRO. What is CRO?
Chief Restructuring Officer, the person who's in charge when a business is bankrupt or requiring turnaround. The CEO or the COO are no longer in charge. A Chief Restructuring Officer becomes in charge.
So not only do you know that cash is king, but you've also sat in the hot seat of restructuring.
Oh, yeah. Oh, yeah.
So you're just the person we want to talk to when it comes to talking about cash. Anyway, you have an MBA from Boston University. Congratulations. I have one from Northeastern. And you're a volunteer mentor. And you active participant and officer of regional nonprofits. Oh, did you know that Andy's part of Above the Clouds, a nonprofit?
I don't know Above the Clouds, and no, I didn't know Andy was part of it. What is Above the Clouds, Andy?
So the best way to describe it to people is it's kind of like Big Brother, Big Sister, but with airplanes. We can talk after, and I would love to tell you all about it.
Okay.
We're based out of Norwood.
Yeah. Oh, okay, cool.
And that's one of the ways. Yeah. So that's one of the ways that Andy and I met, through Above the Clouds, and it's really a wonderful, wonderful program. So we'll have to talk about it more, maybe at the end if we have some time.
Yeah.
So anyway, so Jill is here. The title of this is Cash is King, and when to get money, how to keep it, and how to use it productively. This is an opportunity for you all to ask questions about cash and how to manage it. We're going to discuss when to get cash and how to plan for it and monitor it strategically. So thank you, Jill. It's great to have you. All right, so the first question. Hi, Jose.
How you doing?
Glad you could make it.
Yes. All
right, so why is cash king? And why does it matter? Why do you put those priorities first? And give us a little idea of what is profitability and what is revenue growth, and sort of how to think about cash.
Well, that's a really big question, but I'll start with cash is king. How's that?
Okay. Yeah.
Cash is actually more important than profitability. It's more important than revenue growth. It's more important than everything. And if you take it back to your personal life, how do you do anything if you don't have money in your wallet? And I'm not talking credit cards that you can build up. I'm talking about that moment that you hate more than anything, where the furnace breaks, or you need new tires on your car, or you're almost out of gas and it's not payday yet. Cash is king because you get to do those things in an emergency or a crisis, or on a need as needed, without stress or drama. There is nothing more distracting or more disabling for a business owner than to find themselves out of money. It takes their eye right off the revenue growth, the profit and loss statement, the talking to clients. It takes their eye off everything as they struggle really hard for that unexpected event that comes along. And it always does in business, whether it's a 2008 economic meltdown, whether it's tornadoes in Tennessee, whether it's COVID-19.
So Jill, so cash is king. So how would you recommend that small business owners hold it, or generate it, sort of make that little pot of cash that they have for emergencies? And how much, and how would you determine that?
Okay, so it's just like, again, just like running your household. If you can have what I call a savings account, a little savings account for that unexpected event, that's a great way to do it. You don't wait till the roof leaks really badly to patch the roof. You wait until you see that first leak and you make a determination: can it be patched, or do I have to repair the whole roof? Okay. So if you're planning, one of the best ways to have access to cash in the event of a crisis is to either save it, that's really hard to do, or to have yourselves an operating line of credit that you don't use. So you would take that profit and loss statement, other parts of your balance sheet, of your financials or your balance sheet, to a bank and tell them you want an operating line of credit, and you don't touch it, but you have it. Or home equity line of credit, if you're wealthy enough to own a home, is another way to have a home equity line of credit, and you don't touch it until the crisis comes.
Wow. So you're doing all of your the bank is doing all their due diligence. They're already agreeing that if you need it, that they'll lend the money. That's a great idea. Wonderful.
And they actually aren't loaning anything because you're not going to use it. You just have access to it.
Oh, wonderful.
And you have access to it well in advance. So when that moment hits, you say, I don't stress. There's no drama in this situation. I will take the cash that I need to continue through the drama. And that's how you survive crises.
Any questions, anyone so far?
Yeah, can I ask a question?
Sure.
Like for SBA loans, for example, we didn't have that, ability to apply and wait, because you have to either take it or it will be gone. So if you took it, say you took it, do you like separate it to a different account, or how do you deal with it? Because if you don't, I feel like it could be gone in a month.
Okay, so you're talking about the SBA EIDL loan, is that correct?
Correct.
Okay,
Yeah.
well, that's the second part of Marcy's question. First of all, I say to everybody, take it. You don't have to use it. Or take it and use it judiciously, because the second part of Marcy's question was, how do you use it? How do you measure it? How do you know how long it's going to last? How do you know when to dip into it? Right now, I'm telling everybody to take the EIDL loan. If you haven't applied for it, it's still open. So still apply for it, because there's no prepayment penalty on it. If you take it and your business doesn't shut down over the winter with COVID, you can pay it back, no problem.
Yeah,
All of it.
you just have to pay an interest starting from the day you took it. So, you know what I mean?
Yes, I do, Lisa. Yes, I absolutely do. You do, but that's where we start getting into risk decisions. Okay. So first of all, that loan, for those of you who don't know it, it came out on March 27th. It's a loan that you can apply to. And if your credit score is over 580, and it's dependent on what your 2019 earnings were, you can get money from the federal government. It's actually from the SBA. But it's a 30-year amortization period. So it's like getting a mortgage instead of getting a loan that's only good for 5 years. And that's really valuable. So the risk decision that you're making is for 3.75% to get me through 12 months, is it worth it? So if you were to get $10,000, you're making a risk decision for $375. I would make that risk decision. I would say for $375, I want 10K in the bank.
That's wonderful. So now we've got our money, we've got our cash in the bank, we're preparing for the risk. And so now we're moving forward towards building our business. And there are obviously certain times when you want to make sure that you're profitable or you have revenue growth. You want to make sure that you're using your cash through that process, so you don't have these big growth spurts where you can't support the activities of the company. Can you speak a little bit more to that?
Yeah, sure can. This is the hardest part for small businesses. I have spoken to 6,000 small businesses or more since March 16th of this year. Some of them are on, I might have 600 on a Zoom call, but I've been advising to small businesses for a really long time. And the number one shortcoming in all of them is that they don't understand their numbers. because you started your small business to do something else, not to be a CPA, right? So if you don't understand your numbers, there are free resources out there to you who will work with you weekly, monthly, quarterly, annually, whatever you want to do, to help you understand your numbers so that you can avoid those pitfalls. Our job is not to make you an accountant. But those free resources, whether it's the SBDC that Marcy talked about, whether it's SCORE, whether it's some of the not-for-profits out there, are there to help you avoid those pitfalls. So rather than paying for a financial advisor, I would say you can get great free financial understanding, pitfall avoidance from SCORE or from the SBDC.
Right. And the Metro South Chamber of Commerce is a great resource. You can go to their website, and there's a tab there that says resources, and you can find all sorts of free coaching.
Right.
Jill and I met through free coaching.
Right.
And so she's my coach. So she helps me with those pitfalls.
And by the way, I didn't pay her to say that, but she doesn't pay me. The
Right.
government pays me. That's why it's free. It's I guess you pay for it in your taxes, but the government pays. It's who pays you.
Or maybe in your in the taxes that the businesses pay.
Yeah, exactly.
So now, okay, so we're building our business, and we know we're going to need cash for, let's say, an increase in our products, and we need to fund that, or we need it for starting a location. And so, tell us a little bit about when is a good time to start requesting a loan or looking for additional funding for a business.
Well, it is something that should be reviewed, in my opinion, at least every year when we talked at the beginning about that line of credit. If you get it and you don't use it, but you have a bigger project coming up a year later, sometimes you can go back to the bank and ask them to extend that line of credit. Excuse me, I'm going to sneeze. Maybe not. Sneeze on the truth, right? There are ways, there are many ways, and this is why it's so confusing for a small business. But I was on the phone with somebody this morning who can't get a $100,000 loan for equipment that they want to buy. So they said, how am I going to get that? Right now, it's restaurant equipment. Can you guys kind of see how cheap restaurant equipment might be these days?
Yeah.
As restaurants is going up. And if you're a manufacturer of restaurant equipment, how much are you selling right now? Probably not a lot, right? So I sent them back to go talk to the equipment manufacturer to see if they can get loans from the equipment manufacturer, and some of them are 0%. Just like you see 0% financing on a car, it's not because they're being nice to you. It's because they've got to move those cars. And so the restaurant guy, they want to move their restaurant equipment. So they will sometimes take on the financing for you, and they're getting their money at somewhere between 2.75 and 3%. So they may have put that into the price for you, but now it's at 0% financing. It hasn't really cost you anything other than the monthly payment. So there's that way to do it. There's investors. There are lots of different kinds of bank loans. There are SBA loans. And there are ways sometimes to look right into your operating expenses and your working capital and realize you're spending money that maybe you shouldn't be spending, and that can generate working capital. Maybe you pay your bills really fast. I would say, don't do that. Don't do that, because if you don't pay $10,000 worth of bills for 3 months, you don't go to jail, probably won't impact your credit, and now you've just found the money, that $10,000 you need to put into the business. There are lots and lots of ways that you can create capital within your own company.
Yeah, those are, lots of ways. And I know there's seed and there's mass growth capital. In a couple of weeks, we're going to have a session on funding and finance. So that'll be an opportunity to talk to various lenders and kind of understand what they're looking for when they're going to be lending you cash. So how can a business be profitable but not have cash?
Easily. So, and it doesn't make sense. I hear it all the time. How come I have no money in the bank when I'm profitable? You know, do I need to change accountants or something like that?
Can you give us an example too?
I sure can. Let's just say you make $50,000 a year, and your profit on the $50,000 in revenue and your profit is 20,000, which is good money. Your furnace breaks and it's going to cost you $5,000 to fix the furnace. Now, you're still profitable, right? Because $5,000 off of 20 doesn't affect it. But you've got to come up with that $5,000 right then, unless you can strike a deal with the vendor, which you probably can't in this example. So now you got to come up with $5,000, and you know you're going to have 30,000 in profitability, but 30,000 divided by 12 means you only have $2,700 a month. How are you going to come up with the $5,000? If you write the $5,000 check, now you're out of cash, but you're still profitable.
Well, and then
cash is totally not related to the P&L. Totally not related.
And P&L stands for profit.
Profit and loss statement.
Yeah.
Yeah. Yeah.
So
that's why cash is king, Marcy.
What?
That's why cash is king.
Well, and then there's also the companies that are growing fast. And so they don't have the amount, they don't have the money they need to be able to sustain that growth. Can you talk a little bit about that?
Yep. Number one reason a company goes out of business, a small business, is they grow too quickly. It's called lack of working capital. An example that I love to use, you all remember Boston Market?
Yes.
Boston Market was absolutely a huge hit when it had 1 or 2. So they decided that they were going to expand quickly, which they did. The expansion meant that for 9 months, 6 months, 12 months, whatever it was, they had to find a location, renovate it, outfit it before they could even open the door to bring revenue in. And they did it to too many locations, so they were growing so quickly, they ran out of cash before they could get the doors open for more people to come in and feed the cash back to them that they were investing in the expansion. Does that make sense to everybody? It does. It's just if you need 20,000 to expand, but you only have 10, you shouldn't be expanding, and it's painful. And then you should talk to a specialist who can help you figure out how to get you that working capital that you need.
So in our last session, we talked a little bit about minimally viable products and bootstrapping. And we talked a little bit about the company Square and how they started out with just credit card transaction that they have expanded. And so one of the things is the advice of Ben was that you bootstrap, you bring in revenue early in a small scale with very low overhead to prove your concept before you put in larger investments for a place. Can you just talk maybe a little bit more about that, or some experiences that you've had with that?
Yeah, well, first of all, we all dream. All of us dream. All of us dream about having these big ideas, and it's American, right? This is the world's greatest capital creation country on earth. We have the world's biggest economy, and it's pretty hard to not want to dream when you see people in castles and big mansions and driving Teslas and all that. And it's pretty hard not to dream about that. But the reality is a bad product proposition isn't even going to get off the ground. So why would you invest a lot of money in that? There are exceptions. Pet rocks took off. I don't get why, but they did. But if you look at some of the most successful companies around, Procter & Gamble is probably a great example of that, where it started out in the late 1800s with one product, and its specialty was a soap bar that floated in the bathtub called Ivory. And since then, Procter & Gamble takes a product, develops it, and then puts it into a test market, a small area, to see whether their idea is as good as they think it is. And believe me, they've had a lot of failures. You just don't hear about them because they never made it to market. So that's an example. And don't listen to your family and don't listen to your friends, because they're either going to tell you you're full of it, or they're going to tell you what you want to hear, which is it's a really great idea. Every great idea needs to be penciled with metrics beside it and tracked to see whether it's doing what it's supposed to be doing. And 100% of the people that I see that are successful understand you've got to do the tracking of what really happened against what you thought was going to happen every month. Every month.
That's almost a conversation in itself. So we
It
can
is.
talk about tracking. Can you give us an example of a company that you helped turn around or worked with?
Oh, sure. Geez. I think I became the CEO of a company that we took public. So I was a female CEO at a time when only 3% of publicly held companies had female CEOs. And it was a really unexciting product. It was a plastic bag company. Nothing could be more unexciting, except ball bearings, I think, than a plastic bag company. But when I took over the company, we were unprofitable and we were bleeding cash like you can't believe. And what that means is we had way more money going out than we had coming in. And so we had to figure out how we were going to stop that. It was the most stressful 9.5 years of my life to get it into profitability. But it took doing what I told you we needed to do. We needed to slow down paying our vendors. We needed our clients to pay us more quickly. So when I didn't have cash going out, but I had my clients paying me more quickly, that helped working capital. I was a marketing person, so I invented products. Who would think you could invent products in plastic bags? But we got patents on them and we trademarked them. And then we tested them the way I told you that we did. So we created an easy open produce bag, which is a big deal, right? Because produce bags are so hard to get open. But we invented an easy open produce bag and we tested it at Shaw's. All of you know Shaw's, and they gave us 1 store, and then they gave us 2 stores, and then they gave us 10 stores, and then they gave us the whole chain. So it was a way of testing our way so that we didn't blow too much money to try and go big. We needed to know if it was going to be successful or not. And that one product, we grew to $7.5 million in sales from 0 in 5 years. The company was running at 0.5 percentage point in gross margin. And if you don't know what that means, all you need to know is that's really bad. That was like really bad. To where we got it at 75% gross margin, which was really good. And then we did that with a whole bunch of other, but we tested everything with the people who would be using it.
Mm-hmm. Yeah, wow, that's awesome. So let's see. So talk a little bit about your bookkeeper. You know, a lot of us, we want to be inventors and we don't want to necessarily deal with the money kinds of things. So talk a little bit about what your relationship should be like with your bookkeeper, and what are your recommendations on that?
Okay, well, first of all, do not use your CPA. Most of us have a CPA who files our taxes. They're just going to be way too expensive if you want them to do your bookkeeping. You can find bookkeepers out there for $20 to $25 an hour who will reconcile your books every month. And it's really important that you do that, because if you want to go to a bank for money, they need to see it. They need to see your books. And I have so many clients who are never there, don't have their books in good order, and therefore they can't get the bank loan. It's just so important that you do that. If you think about accounting or finance the same way you would think about a sporting event, what fun is it to go to a basketball game if they don't keep score? That's the metric. You got to keep score. Mm-hmm. I like going to hockey games because the fans are funny. But at the end of the day, I want my team to win. And that's how many pucks go in the net and they keep score. You would never just take somebody on face value to say, yeah, that's the world's fastest man. You want to know that he was clocked with a time. You know, that's the scorekeeper. So your financial statements are the scorekeeper for your business. And it is such a problem when people don't have accurate records. That's the first thing I want to say. The second thing is never, ever, ever let your bookkeeper have access to writing checks, taking cash, using a credit card, going into your bank account other than view only to reconcile your books and records. I have a client, right? It's number one place bookkeepers steal money from trusting owners of businesses. And I have a client right now. In 1 year, she stole $352,000, and we're still going back to the previous 2 years. I know. And I argued with that client for 18 months. I said, she's stealing from you, get her out. She's stealing from you, get her out. She's stealing from me. He would not change his bookkeeper until COVID-19 came along. He had to lay everybody off because he didn't have enough money for payroll. And she went into the bank account, and the bank called and said, I thought you laid everybody off. Somebody's going into the bank account taking $4,500. That's how they caught her. I see it all the time, So trust your bookkeeper to reconcile your bank accounts. Give them view-only access to your bank account. But do not let them go to the bank with cash. Do not give them a credit card. Do not let them set up vendors, because sometimes they set up fake vendors, which this bookkeeper also did.
Oh, wow.
Yeah, she set up Acme Printing or something and then paid Acme Printing $3,200 a month. And the owner trusted her. He didn't ask any questions. So bookkeepers are really important. You can get them for $20 or $25. And as long as you are paying attention by staying and being the one who writes the checks, sets up the vendors, and makes the bank deposits, you should be fine.
Questions, anyone?
Yeah, I have a question, because she was to track the number and also about the part, I didn't understand very well to flow the cash, even you don't have a cash. So because she give example, like if you have for example, if I have a home, I have to pay my home. So she give example, you don't have to pay those 3 months, but if you don't pay those 3 months, bank don't gonna go to your.
Well, it depends on what you're not paying for 3 months, okay? I don't recommend that you destroy your credit score by not paying your bank liabilities. You have to pay your bank liabilities. But your rent, if you don't pay your landlord, it takes them a long time to get you out.
So how long it might take you to get you out?
It depends. In COVID right now, nobody can get you out.
Okay.
But then again,
It depends. It can be up to 18 months, but you still owe the money. I'm just talking about ways of creating cash in the short term. You still owe the money.
right.
Like for example, if you, with a credit card, for example, okay, I can buy one credit card, like, and then I don't pay for 3 months. It's not gonna affect my credit, and then I invest that money in the business. When my revenue start to come out, and then probably pay that money.
I think that's a really bad idea. I would never do anything that deliberately would destroy your credit score. Credit is everything, and you will not get a bank loan if you take some kind of liability that is based on credit score and abuse it. Don't do that. That's a bad idea.
So how can I generate that money, like you said, for 3
Well,
months?
are you in business now, Jose?
I'm planning to do it, so that's why I'm.
Okay, totally. If you're not in business right now, there is no way to get you bank debt. You're going to have to figure out how you're going to have cash to start your business. And there are a number of ways you can do that. One is saving it. You know, we don't like to have our dreams wait for a while, but sometimes you just got to let your dreams wait for a while. So one is saving it. One is tapping into retirement funds if you have retirement funds. One way is to take the risk to borrow the money from equity in your house if the bank will give it to you. But those are kind of the only, or an investor. If you can find what we call the 3 F's, friends, fools, and family, to invest in you, that's another way to get the money. But you
Did you say
cannot
the middle
borrow
one?
startup money.
Did you say fools was the middle one?
Believe me, I see them. I saw a fool put $100,000 into a gym about 2 years ago. He didn't ask for the financials. He didn't ask for anything. Guess where his $100,000 is? Gone. So, but they're out there. My client found a fool.
But I have one more question, because you said to track your numbers. When you say to track your number, what do you mean? Like, for example, for someone doesn't have a business now, I'm planning to do the business. So when you refer to track your number, you refer for someone who's in a business or someone gonna plan to start a business?
For somebody who's already in a business, you need to know where your spending is going. You need to know where your cash is going. So you need to have a cash flow statement set up, which we can help you do. And we will track when the right time to pay your bills and the wrong time to pay your bills so that you never run out of working capital if the business is tracking successfully.
But if someone, okay, I'm planning to open my business, right? So how can I track my number before I open my business? How can I?
You don't need to. You just need to save your money and figure out how much money you've got and then how much you think you'll need to get you through the first couple of years.
So yeah, and really, I think you talked about it. You need to have sort of a template of how you're going to track, what you're going to track ahead of time. And then you need to know what your cost of goods are sold are, what your overhead is, and how much you're earning when you sell your product. And, you know, I think, you know, one of the things that we've talked about in this series is that you want to fail small. You want to get the system going and the products clear with your clients. Know that that product is going to work before you're going to be expanding and putting in more capital to build.
Marcy, if you want to hand me the screen, I'll share a template that I worked on this morning with somebody.
Okay.
It's not finished, obviously, but.
Okay.
So this is, to your question, Jose, this is a cash, what we worked on. This company is not in business yet. Just like you, they're not in business yet.
Mm-hmm.
They're starting a retail store,
Mm-hmm.
and they're going to do some catering. So we started here on the expense side of figuring out who they were going to pay and how much, what their accounting bills would be, whether they're going to have an advertising strategy or not. And we go out every month to figure out what that's going to look like. Here's their rent payment. We take every expense that we can think of in the business, we put it down here, and then we try and figure out how much we think the business is going to generate in revenue. So in month one, we have this client making $56,000 in month one. His cost of goods is $15,000, so his gross profit is $40,683. After he pays all these expenses, which he claims he needs, he has a cash flow problem of being $25,000. That's a problem.
Mm-hmm.
Would you start your business knowing that?
No.
But he had $30,000 to start. So when I take his $30,000 to start and deduct what he lost, he still has $1,700 at the end of the month. But as we go into month two, we can now see that there's problems in here. He's negative cash flow. And we have to figure out, is this a good business idea or not? Now, he happens to have more than $30,000. So he's looking to put in more money, and that may help this problem. But you need to look forward about how much you think you're going to bring in every month and how much is going to go out. And we call that the gazinas and the gazoutas. It's not very complicated. It's what goes into the bank account and what goes out of the bank account. And he ends up having negative cash flow for the first 3 months. But now he knows it. He's not throwing it against the wall to see if it sticks. He now knows he's not got enough money for the first 3 months to successfully run his business. Now what's he going to do? And I sent him a way to think about that. I sent him a way to look at his assets. I sent him to look away at his 401k plan. I sent him a way to look at family members who have money and see if they're willing to invest it. Because at the end of the day, he ends up, if his numbers are good for 12 months, with $369,000 in profit and $183,000 in cash. That's not a bad place to be after 12 months.
And I think, you know, a lot of, and this assumes that this person has determined whether their product is desirable. They must have had some sort of social media so that they know that they have a following, because a lot of times people start businesses with a product that's not fully formed, and they're now starting their runway so much earlier. Like they're like maybe they're not spending quite as much, but they're still starting at a not profitable for many more months before they actually start the clock, right?
Yeah,
So,
and double that, Marcy, because it never goes the way we want it to go. Can you imagine? I have some clients who started their businesses in January and February of this year.
yeah. Yeah, so those are just projections, and so
Right.
it's important to make sure that you've got accurate numbers to start with,
Yeah.
and that you're realistic in what you think you can do.
Right.
Restaurants, this is such a hard time to be able to build a business right now. So that needs to be taken into consideration.
Okay, I want to. I have one question to Jill. Jill, right? Your name
Yep.
is. Yeah, Jill. So, like, for when someone start a business, right? You think it's a good idea you start with a credit card? Like, for example, if a credit card give me credit for $30,000, told me, okay, you have this $30,000 to use, and then we're gonna give you 60 months without the interest.
60 months interest free?
Yes, yes.
Wow. What credit card is that? I want that one. I can't answer the question, Jose, until we would talk about what your business is and how much you need to get it started. So just going back to this example, in this case, this client needed $300,000 to improve his space.
Mhm.
He needed to buy $100,000 of equipment. Now I'm telling him, see if he can go get a credit card with 0% interest for 5 years. That's a great way to finance that, right? Now he doesn't have to borrow it from a bank and pay them interest.
No, when I said like 30,000, I combine like 3 credit cards.
It depends. The answer, I want to help you, but the answer is it depends on what you're doing. What do you need to start your business? What is your business?
No, I'm planning to open vegan store, right? Vegan market store.
Vegan?
Yeah. But because the situation we live in now, so it's too risky for me to go like invest the money in the place.
Yeah.
But I always can start my business without investing money in the place, just because my plan is in the future to be like distributor. So I can use this money to be distributed, because I did before. I remember when I came to United States, 6 months I figured out to do my business. I was selling shoes. My girlfriend have 4 credit card. I just bought a money in credit card and sell the shoes, and then I pay back. I was making like almost probably 2,000 a week, probably a month, almost $10,000.
That's a lot of money. Good for you.
Yeah.
But I have one problem with the business, because I start to sell the things, and then I have a problem with the business, because I remember one time I tried to brought some shoes from China. When they came here, they told me, okay, you don't have a license to sport, so how are you gonna do this? So I lost 10,000 right there. So that's why my business crashed, and then I have this money in the credit card, because I was investing, and then, you know what I mean?
Yeah, this is the problem with small businesses. There's so much that you don't know when you're starting your business, right? To help you out, but you really want to sit down with somebody and plan it out before you invest dime one. And I'm going to tell you, one of the best dinners I've ever eaten in my entire life was a vegan Thanksgiving dinner. It was absolutely awesome. My daughter and I made it, and we loved it. But the problem is it's a very targeted, niche marketed group of people, and they're harder and more expensive to get to. So be careful. I don't think $30,000 would be enough to do that.
No, because my question is because like for me, I have this person, like my sister, she live in England, and then she's a good and do like vegan stuff. Was my plan to bring her here, but with the situation, she can come. So
Yeah.
that's why I was thinking, if I go back over there, Even I have this money aside, I can use this credit card and then just put this business work over there and then generate the money, come back.
Jose, I'm going to tell you, I'm a numbers person and I don't do anything without looking at the numbers. If you want to take the risk and do that, go ahead, but you're not doing it with my blessing. Because I just don't think 30,000 is enough. Not for vegan stuff.
No, not to open the place. I mean, not to open the place. Just to generate the commercial thing, to flow the commercial thing to go.
Right.
And then probably in the future to invest in the place, because if I'm gonna invest in the place, just the kitchen is gonna cost a lot of money.
Yeah. Yes.
Yeah, and I think, Jose, you know what distribution is.
Yes.
And you know that there's a lag time. You now know that there are regulations and rules about that. And so you need to understand the industry very well before you make a commitment to it. I think one of the things that I've heard is that understanding and being part of the culture of the industry is really important when you're going to be starting a business, so that there are no surprises when you launch into that environment.
Marcy is such a great point. It's like learning to walk all over again. You don't even remember how hard it was to walk as a baby, but for everybody who's had children, they see the process for the first 8 to 18 months on how hard it is to get up and get moving and put one foot in front of the other. It's exactly the same way when you start in a business that you know nothing about. You're learning to walk all over again.
Okay, when you say don't know nothing about, for example, I want to be distributor. I don't know nothing about the law, but I can get price anything I want for the vendor. You know what I mean? Like
you can get wholesale costs much cheaper, right?
Much cheaper, or whatever was the vendor.
Yeah.
Like for example, if I'm gonna order these things, I know where they come from. I know where I can get the cheap price. So I already know that, but I don't know about the law. So that's why I try to understand why you say you have to know what, the law or to know the product.
But do you have a customer? Do you have a customer who will buy vegan products?
No, not yet.
Okay.
No, right now, probably I'm trying to figure out between distributor and vegan, because vegan, I depend the person to do me the product. So I prefer maybe to start distribution. I can just get stuff for my own and then sell it.
Right.
Yeah, I don't want to bog this down with what you're talking about I don't have enough detail about what it is that you want to do, but I'm going to say you're asking great questions that I have to respond to by saying, in general, you need to do that financial projection template that I talked about to determine whether $30,000 is enough on a credit card to get you to where you think you want to go.
All right, so we're now at close to the end. Anybody else have some questions?
I have a question to Jill, and maybe it's not related to our topic today, but since you said that a few organizations, they provide that free CPA service, I wonder, it's not about that, but I wonder if you know any kind of source to find out all rules about real estate, about, like, say, if the company leasing some, whatever they leasing, and due to COVID-19, if they can't pay rent anymore, what are the rules now? Like, are you able to break the lease, or what?
No, a lease is a legally binding contract. So you owe that money whether you're paying it or not. Okay? It's a legally binding contract. But the CARES Act has said that people cannot be evicted for not until 12/31, December 31st. So you cannot be evicted between now and December 31st.
And that's residential and commercial.
Yeah.
commercial.
So that's the first thing. Secondly, landlords are the most difficult people on the planet to deal with.
Yes.
So you can talk to them and tell them you don't have the money, and they're going to yell, not all of them, but they're going to yell, they're going to scream, they're going to get angry, they're going to tell you to find it, because that's their business model. It's no different than you having a store and people not paying you because they don't have the money to pay you, but they take the product. You're taking the space and you're not paying them for it, right?
Right.
But if you don't have the money, you don't have the money. The third thing is, and this is where it gets really ugly, this is kind of from the turnaround point of view, is they do have all kinds of rights probably in the lease agreement. I can take a look at it and I can tell you, but each one is a unique and individual situation. I have one client who didn't know that her lease had expired, and the landlord was beating her up for his $2,000 a month. And when she sent the lease to me, I said, it's expired.
Oh.
You don't have a lease agreement now. You don't have to pay him. And you know what the landlord did? Gave her 5 months of free rent.
Wow.
So the answer to your question is, if you have do you have a lease agreement?
Yeah.
Yeah. So have Mar send it to Marcy or send it to me. I'll take a look at it and we can talk about what your options are. But you still owe the money.
Okay.
But the courts right now are all backed up. The landlord has to go to court to get an order to evict you. And the judges probably by law have to rule that you could be evicted. But as a practical matter, judges hate putting small businesses out of business. He
Especially in
or
this
she
environment.
is, what's that? Especially in this environment. And he or she, the judge, whichever it is likely to send you away to work out a deal with your landlord. They do not like these cases coming into their courtroom.
Okay.
All right, everyone, I want to just show you. So does everybody see this?
Yes.
So these are some of the upcoming events that are happening. This Friday, I'm doing the upside of depression. That's where we look at the value of depression in your life. Very different from business, but it's an area that I've been developing. And then there's the Launch Your Business Mastermind series, which has been ongoing. And that's where you can ask specific questions and work towards goals. And that's been really helpful for clients. The next one, next Tuesday, is Creating Customer Rituals. This is with a hilarious guy. His name is Francis Miranda. And he's also called the Unapologetic Dude. So he's funny and he's so, I mean, the ideas that come off his head just are so amazing so quickly. The next one is Attract New Clients with Like No Trust. We have Rachel Leone. She has Leone Marketing, and she's going to talk about what it takes to get and retain clients. The next one is Playing the Game of Funding and Finance. And this is going to have 3 people there. There's going to be somebody from Seed, someone from Mass Growth Capital, and somebody from a bank, a loan officer. And so that's an opportunity to ask more specific funding questions and lending, and find out what you need to do to be able to go to the bank and get some of these loans. The next one is Branding and Engagement on Social Media. Andy's going to be talking there, and Britt Pace from Social Media, the Social Pace, is going to be talking. So that's for that's the millennials telling the older people how to do it, kind of thing. And then the last one is Launch Your Business. One of the things I've done in the past is had a cocktail party where you talk as if your company has already succeeded. So you're not talking about where you are in the mud right now. You're talking about how successful you are and what you've accomplished 5 years out. And one of the reasons to do that is that setting goals and imagining our future is very, very powerful at getting for reaching that. So it sets goals for ourselves. So that's what's coming up. You can register on the Metro South Chamber or also on gleeworks.net/events. You do need to register just so we have track of who's come. So we hope you'll sign up for these. These are really fun. It's great to meet all these people. You see how Jill is so knowledgeable. It's just fabulous. And so wanted to thank you all for coming. If you're interested in or know somebody who is is in need of business or personal coaching, I'm certainly available. I use a holistic approach. Jill is also available for businesses. She's cheaper than I am. And so here's our contact information. And Jill, I don't know if you want to share I think the best thing is to go to this website here. It's the msbdc.org, and it's SEMASS. That's the Massachusetts arm of the MSBDC, or the Southeast. And then the RFC stands for Request for Coaching. And then when you click on that, you'll be able to request a coach, and then you can follow through and find a coach who can help you with finance and help you with some of the things that Jill's been talking about. Any questions?
Is that a free service or not?
Yes, Jill's is free.
Okay.
All right, everyone. Well, thank you so much for attending. This was great. And Jill, thank you so much. It's always great to talk with you. And you've got such a wealth of stories and such great background in finance and you know, watching the trends and keeping track of what we're doing with small businesses.
Thanks, Marcy. It's a pleasure to be here and to meet everybody.
Thank you.
Thank you
Okay.
very much.
All right. Thanks, everyone.
Bye, everybody.
Okay.
Thank you.
Bye-bye.
Bye, Marcy. Chat soon.
Yes.